Insightful value alert. Victrex's share price has taken a hit, and that dip may be your opening to explore a high-margin polymer leader. This breakdown is for info and learning only, not financial advice. If you appreciate smart, data-driven analysis, smash that like button and subscribe. Victrex is a British specialist in high-performance polymers, best known for peak and pack plastic solutions used across aerospace, automotive, electronics, energy, and medical sectors. Born from an Imperial Chemical Industries spin-off in 1993, it has grown into a niche powerhouse with patented products and a global footprint. From a value standpoint, its gross margins remain strong at mid-40% range, though recently dipped to about 44%, roughly a 5-point pullback caused by product mix shifts, rising costs in China expansion, and a currency headwind. Operating margins hover around 16% and free cash flow margins near 22%, healthy numbers demonstrating solid profitability. Net profit margins sit around 10%. The company pays a biannual dividend currently totaling roughly 0.60 per share annually, yielding between 6 and 8%. But payout ratios exceed 150% of earnings, signaling that payments rely on cash flow, not profits. Investors should note this is not a typical income stock. What triggered the recent stock drop? First, earnings in the half-year ended March fell around 17% pre-tax to $23 million, below estimates, on slower selling prices and cost pressures linked to China and currency. Second, price to earnings remains elevated at mid-20s, implying high expectations despite subdued results. Third, medical segment weakness and macro uncertainty feed concerns. Pros: strong market niche, patented technology, robust cash conversion, and potential upside if cycles recover. Cons: margin squeeze, fully dilutive dividends, China ramp-up delays, and sensitivity to macro cycles and forex. Dividends have stayed flat since 2022, with 0.60 per share annually due to cautious capital allocation amid profit swings. Why invest now? You may be buying into a top-tier polymer innovator at a discounted valuation with solid cash flow and a high-yield outlook. Why think twice? If margins don't recover or the China operation strains cash, that generous dividend may not be sustainable, and the stock might fall further. At Insightful Value, we distill complex industry stories into clear, no-nonsense insights. For full analysis on Victrex and other undervalued picks, head over to insightfulvalue.com. Remember to like, subscribe, and check our website for deeper dives.